All right, what's up, everybody? It is Ted here with some bodies and wigs. How's everybody doing? How's everybody's weekend? I know it's been a while since I've made a video. Been doing some other things, of course. Always studying these charts is mainly the thing I've been doing. But work also plays a huge factor. But here today we're gonna talk, of course, Bitcoin, always number one to talk about, just because first in best dressed. We got to see what's going on with Bitcoin before we can take a look at altcoins, I feel like. Without Bitcoin's kind of like the flagship coin, or without knowing what Bitcoin's going to do, we probably don't know what the altcoins are going to do, because the altcoins usually follow what Bitcoin does. It's if you study forex, you study the dollar, so then what's happening with the other currencies as well. If you know the dollar has a tendency to fall, the following day or something like that, because of the technicals you put out there, then you're going to be bullish on foreign currencies. But with Bitcoin, it's a little bit different. It's more if you're going to be bullish on Bitcoin, then you should probably be bullish on altcoins as well. Ethereum, Bitcoin and Ethereum should both probably be in unison. Not in extreme unison, but both following the same trend pattern. Not necessarily trend pattern, but at least should be trending together for conditions to be playing out for altcoins. So what I wanted to do is just go through a walkthrough of why I am bullish on Bitcoin still, and I still think we got a ways to go. I see, especially when I'm looking on apps, a lot of people are trying to go short, and I think it's the wrong move, and I'm gonna go through and tell you why. So again, my name's Ted, this Bodies and Wigs. I'm coming at this from a smart money perspective. I don't do anything on my channel that has to do with retail trading. So if you are a retail trader, or that is your go-to, maybe you should take a minute and put all those ideas aside. Maybe think about trying to think outside the box a little bit, because that's what smart money does. We don't trade off trend lines. We don't trade off triangles or any shapes. We don't try to think of things as going through a channel, or trying to trade off channels, because price does two things, right? Price seeks out liquidity, which will basically create more orders in the market. That's what any kind of chart wants, or any kind of asset wants. It wants more orders in the market. So if it wants more orders in the market, it's going to seek out liquidity. Also, it seeks to balance, because without balance, I'll show you a balance. But balance was basically whenever Tesla announced that they were going to be buying Bitcoin, and then it shot straight up like a rocket. I knew it was going to come back down to that area at some point, because there was no balance there. There was absolutely none. It was just like a big gap is how you have to think about it. So if there's a huge spring up like that, and it didn't balance itself out afterwards, prepare for it to come back unbalanced. So those are the two things that price likes to do. Why? Because this is all based on an algorithm. This has nothing to do with buying, selling pressure, anything like that. Anybody that is probably trading smart money in the big big institutions, they're the ones that have most of at least know the algorithm, and can also have the ability to possibly control the algorithm. Even Michael Saylor himself said, whenever he purchased, I think it was over 50 million or billion or whatever it was in Bitcoin, he said that the chart didn't move at all. So if that doesn't say something is going on in these charts, I don't know what to tell you, because that's a lot of money. That's a huge whale, you know, as they would call it, coming in, and you should see Bitcoin shoot up like a rocket. But if he's saying he bought it and still watch the charts and nothing happened, that tells you that these charts are basing themselves off something else. That means, you know, liquidity was already released into the market, so it probably didn't have to search for it. So that's probably why it didn't move. Okay, liquidity is in the market, so therefore, hey, we don't have to move. So that's kind of how the basis of all this is, and what smart money is about, and how we get around to making these determinations and whatnot. So what we're going to do, we'll go ahead and head on over to the Bitcoin chart. So here it is. And what I will also do is get my ugly mug off of the picture here, so that way I'm not blocking anything from your view. All right, so this is the daily, right? So we are on the daily, and we're looking at what was the bottom that just hit a couple days ago, right around just below 30,000 up until today, right? Now, you're wondering why there's this big green area here. That is called a monthly fair value gap. So if we wanted to even jump out to the monthly, which is what, you know, if you're going to do any kind of analysis, always do a top-down analysis. As you can see here, this is the monthly fair value gap. So the fair value gap is in between 3 consecutive candles. If, you know, there is no wick, that basically if there was been a wick here that came up, you know, and touched, and there would have been a wick down here that came down and, you know, basically touched it, overlapped, then there would not be a fair value gap. But because the wicks didn't do that and left a wide open space, this is basically all, you know, just one big buy. So it kind of acts as a gap, even though there was a lot of, you know, buying and selling, or whatever you want to call it, movements of the chart within this month. As you can see, that, you know, it did wick all the way up here. If, you know, between months, you know, you have this fair value gap, then, you know, this could possibly be a place for price to return to. There was a small one right here. As you can see, it went straight down through it. But again, this was just the wick. So if it was an actual full-bodied, you know, candle, I'm not very sure if it would have, well, it probably would have still went all the way through, but there would be some different outcomes, you know, probably later in this chart. But of course, there are still, you know, fair value gaps in here. There's this one here. As you can see, when it came down, it bounced off of the beginning of this fair value gap, which is what you want to see. If you want to see anything positive come out of something, usually in it's coming down and there's a fair value gap, you usually want to see it bounce off the top of it, or at least make it a little bit inside of it and then return, because that is a bullish sign. That is a bullish sign. So that is a good thing. However, it also leaves, considering that there is a fair value gap, it also leaves vulnerabilities. And this shows that it could, I mean, if it wanted to enclose this fair value gap, it could get down to 20,000, which I wouldn't be surprised at all if it eventually did that at some point. But as of right now, I am pretty bullish up until about 36, almost 37,000 right now. After that, we'll see what happens, and we'll take a deeper dive and look and see why. So let's go back to the day. And one of the reasons I am more bullish at that price I just mentioned is because we had that's the last daily fair value gap that we have right now, right? So this is it right here. It was formed on June 18th. as the price is going down. And as you can see, when the price is going down, what does it do? It closed. I mean, it's closed in the gap here already with a spike, but that was just a huge liquidity run with a spike, basically a huge stop hunt. Does it twice here, but considering it does it twice here, what does it do? Oh, I need to change this since I changed my last one. But what it does is it leaves almost equal lows. And if you watch my video about equal lows, what does that do? It creates liquidity just below it. So let me get a different color on that. Let's actually go with the green sign. There we go. So what that means is that people think that this is a safe spot for a support. And so when it gets near there, as you can see, as it did here, there was probably a lot of buys put in place. But algorithm realizes that, and then even as it pulls up, it comes back down and destroys all those buy limit, or probably buy limits that were set in place, and went probably through the stop losses. So what does that do? That takes the money that was, possibly be going to the trader that thought they had it all figured out, and it switched hands to the person that sold to them, right? So whoever was selling this, that's who got all those stop losses. That basically how it works. All you're doing is trading hands. So, and primarily large institutions who know this algorithm would have been the ones selling this to them. So as I was watching this come in and out and whatnot, and I see it not too long ago, a couple days ago, what does it do? It's the very, very bottom of that fair value gap. At that point, I knew, especially whenever it turned around and started going back up, I knew that that was when it was time to buy, because it had filled in the gap completely. There was no more wicking down below, and so that's when I started my futures journey, and buying on not margin, but buying on leverage for sure. So I'm on 5x leverage from somewhere down around 30,000. It was as it was coming up, I wanted to make sure that it was not going to come back to, down through and then get to this one. That's the one thing I was afraid about. But once I saw that, it made this low on the daily, and it was, making its way back up, that's when I finally started making my way in. And haven't closed any trades. I've just taken profits and then added more to my positions, and I'm still there. I actually just took a profit not too long ago, and also added a new position not too long after I took the profit, because it and I'll show you where and why. So if we go down, and basically if we get down to the hour, and I'll even get into like the 15 minutes of things, of how things worked out. So what I did, especially with this fib that you see here, why did I draw this fib right here? What is the significance of this fib? Well, this fib is whenever price was coming up, right? And you can see as an hour candle here, it was a red candle. This one moved up, right? Even though this was a huge liquidity run, this still didn't close above this short-term swing high, right? After it came down and then made another run, did we finally see a close after a short-term swing high. So if you want me to, I could have put it actually, I no, putting it here doesn't make any sense whatsoever. So it basically, you want to put it after a big move, basically. So you see a big move, it comes down, it creates almost another bottom or another support area, and then moves on from there. And then once it closes above, which it was actually here, or yeah, I think this was the first close above these, or actually it was this one. So I could technically, if I wanted to, put the Fibonacci here, but I personally don't like that area. Let me see if I move it, if it changes much. But the reason I like it here is because a lot of things have lined up with the extensions from this, especially all the way up to the 227. It almost gets to, you know, you can see it gets almost to 227. You probably, you know, I probably where I took some profit off there before it pulled back. As you can see at the 3x point, this is where we had a little bit of a struggle before it all of a sudden took off right at the 3x point. So this is why I like the fib where it is, because it's just lining up with a lot of things. Also with this area right here, this would have been your perfect time to buy. If you move this, I mean, it does give this an opportunity to have an optimal trade entry, but I just like it here because here is the lower optimal trade entry, in which you could have, you know, made more on. But I was already in down here. I believe it was when I was looking at all of, I may have had to get into the 15-minute. Let me get to the 15-minute and go to that area. Ah, yes. Okay. So, you have an order block on the way down right here. Right. So that is your, well, technically this is your last down candle right here, but it's not the most recent. So I took the most recent last down candle, right, stretch it across. That is your order block. Even though you have a huge spike right through here, that's just a liquidity run. Nothing to do with anything. So it didn't close below that, right? So it comes up and out, right? And so what I was afraid of is, as it made this M shape, right, that it was going to come back up, stop here, and then move downward, right? Instead, it made its move upward, and that's where once it crossed, I believe it was outside of this this breaker. That's when I entered. I actually had a stop limit, or stop run on it. So as soon as it exited that breaker, it triggered my buy. Even though it came back down into it, I was a little worried, but I watched to make sure it didn't, you know, go outside or close out the bottom of it. If it was going to close at the bottom of it, I was definitely going to close my trade and then rethink the strategy. But it never did. Instead, what I did is I put more positions in as it was moving up away from this, because even though it got lower than this low here, and I'm doing this, I'm probably doing this from far away. I don't even know if you guys can see, but it got lower than this low, which means it took out this sell side liquidity and then started moving up. At that point, that's when I knew it was going to be more bullish than it would be bearish. So this is where I started my journey. But now again, these are the things that concern me right here, but not right now. You know, whenever you have a huge run like that, and you don't have any, I mean, it came back a little bit and inserted into the fair value gap that it made, and then continued to move up. I'm fine with that, because even if it entered just a little bit and moved on, that tells me that it's more bullish. This one did not. Nothing came back inside of this one just yet. So, but it did move on. It created a high, came back down, and then this is where I placed my fib after you have this high. All right, you come back, and like I said, everything pretty much is kind of, I didn't want it. I've tried placing different fibs, and nothing just makes sense more than where I have it, because, and actually I probably maybe should have it here. It's, even though it's almost at the same because here would be the 0 to 100 would be this little block right here. Once it came in and then came into this area, that it was another optimal trade entry. So your optimal trade entry is anything between 62 and 88.6. Now I can play around with the fib, and that I'm basically a fib lover. Without a fib, not that I don't know what I'm doing. It just helps me. It helps guide me. It helps me let me know, where price is, if we're overbought, if we're oversold, where a good place to buy is. If deviations meeting your extensions, if they line up with something that is higher or something like that. Those are the things that tell me, hey, this is where this probably should be. And that's why I like where it is now, because right now, if you go to the 5.5 standard deviation, you're looking at right at the top of this swing high. That's at about 33,000 or 36,600. So now let me see if I were to move the standard deviation, because generally, rule of thumb, if you want to put a Fibonacci in, you want to put it on a low just before it breaks a high. But like I said, this is also the 15-minute. This is not the daily or the 4-hour. And I think that's what made me look at this in a different light. Yeah, see, so in the 4-hour, you have the closes here. Here, you don't have the closes, right? These didn't close above the 4-hour. The big spike didn't close above the 4-hour. But this one did, right? So, and I could have technically put this was after, it retraced back into the optimal trade entry. So again, I put a position on here. Let me click this, and I do want to kind of unlock it and move it. All right, so if we were to place it there, see, this wouldn't have came down into the optimal trade entry unless I would have moved this here, and then you would have barely gotten to the optimal trade entry. So that's why I wanted to keep it where it was. Once I got into, again, closer, even though these didn't close in, once you get closer into a chart, you can kind of almost pick and choose. I wouldn't say pick and choose, but find something that makes sense for your fib. So again, if this, even though these closes are here, didn't matter, they didn't close up there on the the 4-hour daily or anything like that. So after it made that big move, I found this is off of a bullish order block. So you see you have a bullish order block right here. Let me do just actual trend line and turn this thing off. So it basically is almost as if I was putting it right there, but I am using, where is it? Oh yeah, just right after that, this as the high. So the first swing high, that's it. And then after that, I let it go, right? And then it just, I'll use the extensions from that point on. I don't need to move it unless, I mean, I could move it and try to find new places. But generally, if it starts at one place, the rest is going to follow. I'm trying to think where else I even could put it, and there's really nowhere else I could put it. Like I said, the other place, like, let me unlock it again, or is it unlocked? The other place I probably, we'll just leave that right there. Another place I probably, like I said, probably could have put it, and I'm on 15-minute. So would have been these lows here. And then the high just after that would have been here. But then, like I said, it doesn't come down into the optimal trade entry. It does right here. Now here's a perfect time, but now you're way too late, and you could have missed opportunities to take profit, right? Wait for it to come back and then enter again before it takes off again, because I know I entered again around somewhere in here. And reason being is because, yeah, look, I mean, it barely hit the 62%. Well, hold on. I'm not even there yet. Actually, I think this was a fair value gap entry. So, yeah. Okay, so you have this spike down here. This one probably just went just below it. Right? So that would be institutional order flow, entry drill, as perceived by smart money. I learned most of this from Inner Circle Trader. He teaches most of this about Forex. I take it to crypto, right? Because it works in crypto, believe it or not. The algorithms are the exact same in Forex as they are in crypto. It's uncanny how the hardest part about transferring this from Forex to crypto is that, like I said, with Forex, you have the dollar as the flagship, so you can trade other pairs like euro dollar, pound dollar, Aussie dollar, other things like that, based on what's probably going to happen with the dollar. As to where here with crypto, you kind of have to hope, not really hope, but just take a look at things and see where liquidity is, if it's going to be seeking that out. There's no really good fundamentals that you can go off of, especially right now. The thing that I can think of, especially when it had its lull time, all this going all the way down, was when China was telling all the miners to, shut down, turn in on their equipment. I don't know if the Chinese government was taking over on that, and they're mining themselves as the government, and they're getting rid of the private businesses that were mining. That's something that China would do. Or if they just wanted to get rid of crypto altogether. But it doesn't make sense because almost all of the centralized exchanges are in China. Like Gate IO is China based. Trying to think, I'm sure there's plenty others that I can't think of right off the top of my head. But there are a lot of Chinese-based crypto companies too. Like I think there's one called BitBit. So for them to shut down the mining aspect of it, but still have companies that were, relying on crypto, it just didn't make sense. But I'm glad they did, because now a lot of these companies, I think there's some Canadian mining companies popping up now, one called Hut 8. I think Riot Blockchain maybe doing something with that. Or maybe doing better than what it was. Let me actually look at that. Hey, TradingView actually has a really weird new look. I noticed the logo changed on my app, and I was like, oh, but I never had to check the front page. Okay, so looks like Riot maybe hit 88.6%, hit kind of a semi bottom just before this accumulation here, and then bounced back out. So it looks like that was a buy model. And it looks like it's continuing to buy. We go to Marathon Digital Holdings. Marathon's also mining company. Looks like kind of the same situation. Geez, I thought I said 74 for a second, but it's only $24. I didn't catch Riots. I think it's at 30 something. That's what it has been. It may be a little bit higher. No, 28. Okay, so might be a good time to get in, because I remember having it. I remember having it when it was up to like 80 something. And well, I didn't sell because then me thought it was going to continue going on upwards. How high did it get? Yeah, 83. God, I remember that. That was crazy. The thing was that we had it here, and then it dropped, and then it came back up here, and we almost sold, but we wanted it to get higher. So then we held up until probably like right around here, and then me and a friend of mine started selling once it got around 35 or so, and we thought that was going to be a top and it was going to fall and keep going, and this thing just kept going, and so all right, we're just going to ride the wave, not realizing it hit a top and then made its way down. Sold off most of my earnings somewhere around in the 40s, and then putting some back in now. And then last thing I wanted to check is Can, because these are the guys going to be producing the supercomputers that are going to be mining it. So Can had been going down as well, probably because they weren't selling them to Chinese, even though it's a Chinese company, not selling them to Chinese, farmers or miners. I did do kind of a TA on it, and it looks like it did hit the area I thought it was going to hit, and I actually bought there. My friend thinks this it's going to come down to around 4 something. I don't see that happening. There are some small gaps in these lines here that I have broken down, but there is also, I mean, also the conditions in the market right now are for it to go up. And even though NASDAQ, let's check out the NASDAQ. I think the NASDAQ, I know that SPX went through the roof on Friday, and it looks like NASDAQ did too. So even though you have these conditions and it looks like it could possibly fall, generally the crypto companies are barely affected by that. I mean, you'll see it somewhat affected, but not a whole lot. You know, sometimes especially those, Can, Marathon, Riot, they're all part of NASDAQ. Sometimes their waves look exactly like NASDAQ's. Some days they're the exact opposite. It depends primarily on this guy, on Bitcoin. That's what it primarily depends on. So that's why I'm still bullish on Bitcoin here. Again, let's see here. So earlier today, or last night, I even put a buy on it, and then I went somewhere today, and I came back and I was like, this thing just shot, because what I thought it was going to do is I thought I was going to hit the breaker, and that's what these two red lines are. So these are 15-minute breakers. We go all the way back over here, right? Generally, whenever you have like an M shape area, right, you have your last down candle, an up candle, right? And then if it trades down through that same area, once it comes back up to it, then that is what's called mitigation, because anybody that was actually selling or buying, I should say, at this point, right, and they held that trade after it traded through here, now they're in the negative, and these guys have deep pockets. So these guys can hold forever and then wait for it to come back up and then hit the bottom of this, because if that's where they went long and it hits the bottom of it, they can release that trade and get out of the negative, and those guys are fine. And generally that's what happens. But if it's bullish, you know, you can see they released the trade, it probably came back down, and they were like, oh, well, it's still bullish, I might as well buy it, you know, continue buying. They saved themselves, you know, however much percent that was. Let's see what it is. You know, 1%. 1% Bitcoin is enough for me to want to do that, to be honest. But look, now that it's on top of it, see that this is how I know it's all an algorithm, because I'm drawing all these things out, and it goes up to it, bounces out of it, comes up to it, bounces out of it, and then shoots right through it, and then now it's on top of it. Explain that to me if it's not an algorithm. If that last down candle, which is called a breaker, right, if that has nothing, you know, if this is all at random, then wouldn't the price be somewhere in the middle of that, just, you know, floating around or up above it or doing something? No, instead it touches the bottom of it, mitigates, sells off, people buy, and then buy a lot, so then it runs through the breaker, and now it's a positive breaker instead of being a negative breaker. Actually, I don't even know if it's a breaker anymore. What I would look at for anything to be a breaker would be your last up candle in this area, which is this guy right here. So this is your last up candle. Even though, yes, there's a red spike, it doesn't matter. You're looking for the full candle. Boom. Okay. So it has went inside the breaker. Almost got to the top. Comes back down. Touches the top of this breaker. Now it touches the bottom of this. So it's stuck in between the breakers right now. So this is going to be your resistance. But I'm still bullish on it. I still don't think that that is the end of it. Why? Because just above it is liquidity, right? So we still have a ways before people want to sell. People are going to want to sell when it gets to the peak of this, which surprisingly is right at 300%. See, this is why I left the Fibonacci as the way it was. 300% is almost the exact peak. What is it? 34462.2 was the high here. 344,267. So about $40 less. That's not bad at all. And just above that peak, what we have over here. So yeah, I always have to go through and look at all the different scenarios. It looks like whenever the peak was coming up, it was probably because of this order block here. These three candles right here made a bearish order block. And as it traded down through it, that's what created the order block. If it would have stayed above it, it wouldn't have been an order block. So instead, it does hit the bearish order block and then fall down. So these are all in bearish conditions, right? But instead, right now, we have been in bullish conditions for the past couple days. Now, it's not to say that right now we could see this price, you know, kind of falter off, you know, maybe go sideways for a little bit. But ultimately, what it's going to want to do is going to want to get above this spike because that's where the liquidity is, right? This is where you have your people have buy stops, right? Because they think as soon as it gets above this spike, it's going to come back, retest, and then move on, and they're going to catch a breakout. And you have that with this, and this. So you have three different ones, or three different areas right now to where people are going to try to catch a breakout. Generally, whenever price gets close to those areas, it does a freak out. And what I mean by freak out is, well, it also did it to this guy here, even though this is a short-term high, still there's liquidity above that. People wanting to sell at that level, thinking it may not get up to here. Like, hit it right exactly. So it comes up, it hits that level, goes above it. All right, so it may have triggered some buy stops and then pulled back down and then taken out their stop loss, while also people are selling short, thinking it's going to go short, and then eventually it's going to go back up and then take that liquidity as well. So it plays both sides because that's how smart money works. It's searching for that liquidity. It's searching for those people to put in their market orders. It has nothing to do with some kind of, I don't know. Let me see what you guys would be thinking right now, because I don't even know. I'm so far detached from whatever you guys think if retail theory does. Here, let's draw a trend line. Just some random trend line here. Okay, so we got a random trend line here growing, right? So maybe this is what you guys think is what's going to happen. I don't know. See, this is the thing about trend lines. You can put them in multiple different ways, and you really don't know which one's the right one, because they're not the right one. The only good thing about trend lines is it tells me where there's possible sell side liquidity, because once it comes back down to these lines, people are going to be buying. I would know to sell because it would sell through that trend line. But to me, this looks like, you know, it did form some kind of pennant flag, something like that. See, this would have been a bear flag, right? No, it would have been a bull flag. Okay, my bad. Gotta get my flag straight. Yeah. Because no, this would have been a bear flag. This bull flag's angled down. They angle down because then they go up afterwards. See, for this would have been a bear flag. This should have been a bear flag, right? So probably should have went shorter, but it did not. So there you go. This is why I don't believe in bear flags, bull flags, triangles, trend lines, any of that crap, because what I do believe in is liquidity and the algorithm that the market gives you, right? So, and this is what we've got so far. All right, so again, I do believe it will eventually. I'm waiting for it to see if it's gonna fall back anymore. To see how I can see if I need to put any more entry points on my trade. So what I could do is possibly try to use some kind of fib for this, but right now it's looking a little bit oversold, especially with this is the only indicator I use. It's called the Williams percentage R, and it'll give you no, it's not an RSI, but it will give you an idea if there's a kind of like an explosive move or not. Just because you'll have, you know, something like this, like what you're looking at right now. And here, let me, it usually comes 14 standard. I add a 29 to give me a little bit more of a deviation of what's happening long term. So if we're to do the 14, and you see it oversell, but then it pulls down really quick. It pulls down really quick to the oversold. Boom, there you go. Now you know it's probably going to jump back up again to an oversell. Now it comes back down. And even though it's moving upwards, it's still telling you where it's oversold and undersold at the entire time. Not really like an RSI to where it kind of ebbs and flows, you know, with the chart. This actually more ebbs and flows with exactly what is happening. You know, if we were to turn this sideways, or you know with the Williams percentage, it would almost look almost the exact same. So that's why I use the Williams percentage, because it has a better ebb and flow of, you know, what to look out for if there's going to be any kind of explosive move. Generally, whenever you see explosive moves, you'll see it, you know, everything kind of trending, or at least it's staying down here on the bottom, but you'll see this start to move up, and then all of a sudden you'll see like a big move like this come up, and then you'll see the Williams percentage come up, and then this go down, the Williams percentage go down to oversold, and at that point, boom, there's usually an explosive move that happens. Let's see if I can find one. What I'm talking about. Yeah, that wasn't really it. Yeah, see how this is kind of just meandering sideways, and then boom, you get this up, and even though this is going down, now you can see the Williams percentage going up. Boom, it pulls down, this also comes down as soon as it gets to the oversold part. Boom, there it is, explosive move up. I probably would have added, you know, if I more than likely I may have added, yeah, 8 o'clock in the morning, more than likely I did add a position to that, and I may have closed out, you know, partial around here or something. I don't know. I've been in I've been in this Bitcoin trade for so long that I'm not for sure where all my entries and exits are. But I am still going to be in them until 36,000 at least. At least this right here is where I believe it get, because why? Liquidity. Here is the, here, I'll move that over here, I guess. Here is the bottom of a, actually, that's not even the fair value gap. Bottom of the fair value gap would be right there. That's the candle. Yeah, there's a 15-minute fair value gap right there. So it could get above the liquidity, closing the fair value gap, move backwards a little bit, and then continue on. Here you go. You have another opening for a fair value gap right here. So there's a lot of areas that can come up, be filled, completed, closing gaps, fair value gaps, whatever it is that needs to be completed before reaching liquidity, which would ultimately screw with retail traders, which is what it wants to do. It wants to take all retail traders' money. At this point, all retail traders are very suspicious of Bitcoin getting, you know, of course we want to see it get this high, but they're, you know, everybody's got them so you know, on the edge that Bitcoin is never gonna make it this high ever again. No, it's just that charts go in cycles. You know, if you see any chart, if you could watch a forex chart, a corn chart, you know, a beef chart, anything like that, things go in cycles. The thing is that we just, you know, Bitcoin just recently exploded to levels that we haven't seen before, so we don't know exactly what that the cycle is like. But if you go back in time, the cycles are kind of similar. You know, throughout time, you know, had, you know, when it goes, it takes off, and then when it comes back down, and I'm talking about going back to, you know, the early days when it was going from, you know, hundreds to thousands of dollars. Those kind of cycles are kind of still repeating to this day, about every 3 to 4 months. So even though we had a huge bull rally that elongated way faster than it, I think it should have, because that high that in 60, what was it, 65,000? When did it make that? I want to say it made it in May. $59. There you go. Okay, so here's your 65. So here's your high. April. Okay, so it made it in April. So we started this bull run back in November, basically, once it crossed the 10,000 mark. And for it to last from November to April, that's 6 months. You know, generally, like I said, they last 2 to 3 before you see. But I mean, I guess it kind of did, because there was a lull there in the middle. You know, somewhere around February was especially bad for Ethereum. And then after that, we saw the spike up again. Oops, not that. The spike up again. And then, and of course, you know, you're going to get a top, then you're going to get any, you know, some kind of retrace it back to 70 something percent. Generally, is what I like to look at. And then after that, you know, look for opportunities to buy if it hasn't fallen back, you know, at least 50 to 70%. or something like this, you know, some kind of PD array, you know, premium discount array. So like a monthly fair value gap, for instance, would be one thing. Fills in the gap, gets to the bottom, boom, takes off after that's done. So that's why I'm still bullish. Again, still bullish until we get past all these liquidity points. Because again, each liquidity point is going to draw buyers and sellers. It's going to draw buyers to buy above it because they're going to try to catch a breakout. It's going to draw sellers to sell it right at it or below it, because they're going to think that it's going to, you know, sell and go down. When generally, like I said, it goes wonky every time it gets to one of these areas. It'll go above it, trigger the buy trigger people, go below it, take out their stop losses, and then make the sellers think that it's actually going to sell, and then go back up, and then so the sellers chase after it, and then it'll go back down, and it'll just do a bunch of wonky stuff. I've seen it every single time. So whenever it's in bullish conditions like this, especially when it's running through breakers, I don't see any reason for it to stop, especially when you ever have 1, 2, 3, 4 liquidity points, and that last liquidity point is going into a daily fair value gap. So here is where I would still be holding a portion of what I had, but here is where I'm going to take off most of what I have, and then see how far it retraces, if it does retrace, anything like that. So that's where I'm at on Bitcoin. I wanted to try to do Ethereum, but I'm not for sure if we'll have. I'll also do it really quick. So it's kind of the same. We do have. I think this is okay. I'm on the 4-hour. I do believe this is a 1-hour fair value gap. Yeah, 15-minute. Sorry, 15-minute fair value gap is just entered. So probably got about halfway through. Rejected. We have a bullish order block sitting right here. And as the same with Bitcoin, I'm bullish. They're both bullish at the same time. And if not, you know, that means there's some kind of discrepancy in between the two. And generally when that happens, I'm on the sidelines. But if they're both in bullish conditions, I'm usually looking trades for both. As you can see, it did come down. Looks like it did almost tap the bullish order block here. That being the volume, don't worry about the wick. Again, look at it. It looks like it's oversold, and look, it looks like it's dropping. Okay, which it is. It is kind of dropping. Then it could easily, boom, turn around and go back up. But it's just got to get through this fair value gap. This used to be a premium level. I don't think it's a premium level. It might be a premium level. I think from here down to the bottom, and I also have the discount level somewhere as well. So premium discount levels are generally at like the 62% level if you flip charts. So okay, so here would be your discount level. So anything below this, especially after it, well, of course, they have to make the bottom first, and after it's coming up, then anything below the 62% level would be considered a discount buy. But you usually wait for it to get above the 50% and then come back down. And I don't think Ethereum is going to do that with this. It's just waiting for it the moment, I guess, to run through. Here I say, take profit here, which is at around 2,250, and that's because that's the opening of a fair value gap, a 1 hour fair value gap at that, because it could just poke its head in and then move back. Like I said, just it is take profit level. You don't take all profits, but it could be just take profit level. See if it's going to retrace, see where it's going to retrace back to, and do it all over again. Because then you have this guy right here as one of your liquidity points, and then here, this is the one I've been waiting for Ethereum, the 2640. Once this one's hit, then that's, it's kind of like the this area here, the 36,600 for Bitcoin. For Ethereum, I am definitely waiting on this 2640 area to be hit, because once it's those areas is where I think it could possibly turn bearish again. I don't know for how long, or it may not. It's just something I'm anticipating, and it just comes from experience and I had TA these smart money charts, and that would be all thanks to Inner Circle Trader. So wouldn't have half the money today. No, I'm kidding. And wouldn't be as happy if I hadn't learned a lot of these things. Let's just say that. Next other ones I am looking at for trading, and I'll probably have to do a video on next time, is Monero. Monero is always going to be around. Privacy coins are always huge, especially since there's so many of them coming out now. Like Pivx, I don't know if Ghost is still around, Pirate, what's it called? Pirate Protocol. But Monero, definitely flagship one, along with Zcash. Zcash is, I think a little bit better, just because it kind of has that switch. It makes the government be like, oh, you can be kind of trusting because you can switch on and off whenever you can be private. When Monero is just like, nope, and no privacy. And next one I want to look at is Litecoin. This is a daily here for the Litecoin. The only thing with this, it has not, I want to see it crack this, these equal highs, and I think it will. We're not even halfway there. And sometimes you can do a reverse. Geez, what am I thinking about here? Where is it? There we go. Fib. A reverse fib. What I mean by reverse fib is taking a current low and going back to a previous high, to kind of gauge what you could be looking at, especially if you're aiming for specific highs, because then that can give you an area of where to expect it to come out of, and then also pull back to before moving forward. So something like Litecoin here, what I expecting it to be doing is, I'll give a quick rundown really quick before I get off, because I know I'm going way over on time. I'm like an hour into this thing, aren't I? Yeah. There is probably some kind of breaker right around in here, I would assume, or above, because it looks like, even it stalled here, came up, and then after that it just dropped really quickly. So it tells me that if I dig in closer, I'll find maybe hour, maybe I doubt a 4-hour breaker, maybe hour breaker, something like that, and then it could come up, hit that, and then that would be the resistance level for the time being, and then it pulled back to a optimal trade entry level. Optimal trade entry level again starts at the 62%, goes down to, I like the 88.6. ICT, he does 79. However, I've done a lot of backtracking, and there's another teacher out there that does 88.6. I like 88.6 too. And it just depends on what it lines up with as well. So I want to see if this, I'm going to dig into this, see if there is a some kind of breaker over here. It may have already hit it, since it, yeah, it did get above the 50%. General likes to get a little bit more than that, above the 50% before it starts pulling back, but sometimes it may just get right to the 50%. And if it does that, there may be a deeper retracement to the 88.6, which would be even better, because then you have a way better entry to earn more money than if you were to just I mean, you could put a buy limit right at the 62%, which has what has been suggested, but sometimes what I'll do is I'll just put a small buy limit entry, and then I'll increase it as it gets down to the levels. Or if I'm there and I'm able to watch the chart, I'll just watch it and see how low it can get. And even though if it goes through and maybe strikes through the bottom, as long as it doesn't close out the bottom, then I'm not too worried. But if it closes below the 88.6 and there's some conditions over here that could cause it to be bullish, that's when I would probably not consider that trade. So just throwing all that out there. I know I went through a lot, even though this is supposed to be a quick technical analysis series. I think I went over a lot to help you guys understand what the quick technical analysis series is, how to be a smart money technical analysis trader, what it means to look for liquidity, what it means to do all those things that that retail traders don't do and don't understand. And they just think everything's based off triangles and trend lines and whatnot and things, and it's not. It's based on price levels and price action and momentum, and also time of day is the hugest thing, to be honest. If it's not trading at the right time of day, don't trade it, but if you're a swing trader like me, you got to hold on to it and, just wait until the right time. But if you're a day trader, wait till it hits that 8-9 o'clock in the morning area, whenever, New York Stock Exchange opens and people start trading, and the next thing you know, altcoins could start trading at that time too. And they usually do, actually. So if you enjoyed what you heard and you thought you learned something, I did something for you, please do a huge favor for me and subscribe, like, hit that notification bell, all those good things, because that's what's going to help me grow. Also become a Patreon, so I can come out with more of these videos, and help me out with some subscription services that I have that help me make these videos. So anything would help. I started at $3. Eventually I will be coming out with a Telegram service that will be giving you setups, as well as signals. So I just, work is killing me. Work is killing that aspect of it. But I will get it going, I promise. Give me some time. I'm still in a mentorship as well, so I'm still learning. So the more I learn, the more I want to hold off until I feel like I've learned enough, to continue going on with this. So, or at least, I've built enough profit to be like, okay, I am very, I mean, even though I am fairly, I would say a good 60% accurate as far as my trading is concerned. The 40% that isn't accurate, it's small little things that I realize later on that I could have done, and also probably still could have made money on, had I taking a closer look at what I was examining, and just things like that. So thanks a lot, guys, for stopping by, checking this video out. And what I want you to do after you get done watching this video is just keep wearing your pants. Just wear your pants, guys.